My friends, what is going on? Welcome back to the channel. So we finally got enough likes on a video to give a little update here. If you're new to the channel, first and foremost, welcome. As always, please follow me on Twitter if you haven't done so already, Colin_Gladman. I like to do these little update videos for you guys. I'll be honest, I don't feel like I ask for a lot in return when I ask for 500 likes or 1,000 likes for a week video. But anyway, is what it is. We're here now. You guys also know the deal. Nothing in this video is financial advice. Everything is to... I view the market from a technical analysis standpoint. I don't really care too much about what the news says. If you follow me for any amount of time, you know I'm a news justifies the move kind of person. So all I am looking for is what do I feel like the charts and the volumes and the overall price action is telling me. So let's jump into it. Crazy start to the week, right? Last week was overall a pretty good week. And then over the weekend, we basically had news that a company called DeepSeek out of China was able to do, and before I go any further on this, I want you to know that this is my opinion, of course, what is going on. I'm just a dude on the internet, but I have had a lot of success in the markets. So take that for what it's worth. As always, do your own due diligence on this. So, and I always like to teach things in its overall in its most simplest form. I agree that the market is not complicated, but people try to overcomplicate things too many times to try to make themselves sound smart. Also, I just literally finished my workout about 15-20 minutes ago, so if at any point in time I sound like I'm breathing like a fat kid in a candy store, it's just because I finished my workout. So DeepSeek, Chinese AI company, comes out and basically says, hey, we've done what other companies have done. We have built an AI model that is fantastic, but the big reason for the sell-off was because they said they did it on very little amount of money. I think the initial report was like $6 million. Lots of people have called BS on that. Let's get that. That's not inside my wheelhouse. So we'll see. But I was watching a lady talking about it today on CNBC who said, even if it's not 6 million, even if it's the higher number that people are throwing around, it's still way cheaper than what the current market concept for it is. So why did we see that type of sell-off in Nvidia and other chip companies today? The reason is because the fear came out of essentially that, hey, these companies aren't going to make as much money anymore. The demand for chips is going to be drastically decreased, and you're just going to be able, the barrier to entry is going to become much cheaper. And even if companies are like, well, Nvidia makes a better product, but if I can get to the same place, for a cheaper way of doing things, that's what we're going to do. And as a fiduciary of a company, sometimes that is your responsibility, is to make sure that you get there in the most effective and cost-effective way possible. So obviously, stocks that have run super hard on just essentially unlimited demand like Nvidia, those companies took a really strong hit. It's lost like $610 billion with a B dollars in market cap today. Now, overall, do I think that what happened today was an overreaction? The short answer is yes. I do think that. I also think that the elephant in the room that most people aren't really talking about or looking at is the Fed. So on Wednesday of this week, we have, it's just insane. We have the Fed interest rate decision, followed by Powell's speech, followed by Powell's Q&A session, and then Meta, Microsoft, and Tesla all have earnings after the bell. Then Thursday before open, it's GDP and jobless claims. And then Friday before open, you got PCE. So that's 8 things that I just named off that any one of them could potentially really shake up the market. And we got 8 things. So there's a lot of potholes. That's why I tweeted out, first thing today, that overall my plan this week is to kind of do nothing until I get a really good feel for what is going on. So now let's jump into the charts, and I'll talk about, I'll just kind of go through some of the, I'm not going to cover as many charts as I do for the Discord, but I want to cover some good looks and what to look for overall. So let's start with the indexes. So the first thing that is good that we had was we had a change of structure. What I mean by that is we had been in a series with these red arrows right here of making lower highs. And those green arrows, we were consistently making lower lows. Now we are at a point where we have made a higher high. Now, the next thing to really feel like, so the market moves like this, team. The market makes a high, and then it makes a higher low, and then it makes a higher high, and then it makes a higher low, and so on and so forth, right? Or it makes a low, then it makes a lower high, a lower low, so on and so forth, right? And overall, what we're looking for is a change of structure. Is we've been in this, and now we want to go to something like this. So even though we gapped down, and yes, we did create an island top up here, overall, I just want to see, are we going to put in a higher low at some point? If we go out here on a weekly basis, like this little imbalance right here, the where we gap down, we could just be taking care of that imbalance before overall making a push higher. But I am waiting on Wednesday for the Fed to really kind of start trading any big positions. I scalped a couple of SPY puts today at times, but overall pretty much just sitting on my hands. So what I like about today is we have a good volume, a high spread candle with good volume. So this was definitely people buying the dip. Didn't quite fill this gap from Thursday, January the 16th, and that's a good sign. You want to see those gaps get protected. I also posted this on Twitter a couple times that how fast gaps get filled gives you an indication of how strong is that trend that's underneath it. So once we started gapping up and moving from down here, like these gaps really didn't even get challenged, and which is why we just kept pushing higher and higher and higher overall. So now that we've made a higher high finally, now I'm looking for a higher low to get put in. If we take our Fibonacci from the low on Monday, January the 13th, up to our high, you can see here that we haven't even hit a 0.5 retrace yet. So really buy the dip opportunities come in what traders describe as the discount zone. The discount zone is once you get below that 0.5 all the way down to the double bottom. Anywhere in there, you're really getting a discount on this move. Professional traders don't chase crazy moves unless they think that move is going to be extended. So on SPY, overall, that would be what you're looking for. The reality is as of now, this looks like a breakout, come down, potentially even retest as low as like the 580 area for the next move up. That's what I think overall we're going to be looking at. For the most part, we're above all of our important moving averages. We still have the daily 9 and the daily 5 up here. Once you're above all of those, you trade your plan, right? But overall, it's stupid to try to short in those environments. If you want to buy puts, you buy puts on retest of moves up, because that's how distribution works. Distribution typically works on some type of gap up and then a continued sell off, and then you gap up the next day and continue sell off, and that's how you get your stair stepping. So overall, I like this move on SPY as far as the volume goes. There was, in my opinion, a clear. It wasn't just a market-wide sell-off today. You had Meta green, you had Amazon green, you had Tesla that tried to flip from red to green. I mean, on days that overall market was down a lot, it was Apple is another perfect example. That it wasn't the fact that, oh, the entire market is just selling off market-wide. It was just money was rotating out of these chip companies that have been very inflated and is rotating back into some of the laggers. I've said repeatedly, from a big chip standpoint, from a Mag 7 standpoint, I think Amazon could be one of the best plays this year. And we'll get to that chart here in just a second. So that's why overall I still feel comfortable. Now, when I'm talking about the Fed, so on QQQ, let me finish with the charts and then we'll jump into the Fed. So on QQQ, this literally is a retest. Let me clean some of this up for you here. Whoops, not that. So this really is, if you extend this trend line that was from, come on. One thing I hate about TradingView is when you change time frames, the way your trend lines like slightly move. So this trend line that was the breakout and the retest. Very similar here, right? We broke out, we ran, we went through a correction. I said many times that this is a very normal corrective looking move, and then we're starting a new move. Now on QQQ, we have restart golden zone. Came right down to that 618 retrace. It was also the retest of our falling resistance line. Now, I will say I don't like the fact that we closed below 515. So what I would like to see tomorrow is any type of gap above that 515, any kind of comeback and retest and show us support. I think we're pushing up overall the rest of the week and going forward. Certainly at least enough to push up towards challenge this island top up here for sure. So, but that's what you want to look for. 515 is kind of key support. And always when I say this, like when I have my trend line up here at 515, that is not, the steel barrier that it's just blink, blink, or blink, blink. Think of that as kind of a range where it can kind of move up and kind of push up and down. But overall, that 515 is the area of interest. That is kind of a major support resistance flip. So always give yourself a point or two when it comes to it. So like I said, they're not steel bars. Think of it as kind of like a rubber band aspect of it. So I do like that. Let's see here. No, not that. This one. So, and where's my 50, right there. So here's what I don't like. I don't like that we didn't, like I said, close above and retake the 50-day moving average. So enough selling pressure. If things do get ugly, we certainly might have a day with the 200-day back down here towards 480. That is absolutely a possibility. As of now, I'm looking for the retest. If we keep rejecting 515, and if we go in here on the 5-minute candles, looking at it today, right, you can just see how many times, like I said, it was just kind of ribboning around that, and every time it came up to try to test, you were getting pushed down and then getting pushed back up. So overall, I don't know. The Q was definitely weaker. IWM was definitely weaker. SPY was the strongest index by far. So less comfortable here. But when you think about how bad Nvidia sold off, I mean, I don't even remember what it finished the day at. What it finished the day at? Yeah, 16% down. Overall, it's not the end of the world for Qs to finish down about 2, almost 3%. So like I said, right now, looking at this as a normal retest, but we gotta get that change of structure, right? So we put in the higher high. Now I need a higher low somewhere in here, and then we want to make a higher high after that. If you push back up here and then fail, then you're going to find a lower low at that point in time. You're back into that structure. So it's all about waiting on structure a little bit. IWM, not going to spend a ton of time on. This is going to be huge for the Fed, so I guess let's go ahead and jump into the Fed real quick. So Jerome Powell, December 18th, back over here, everybody remembers this, basically came out first time. He was a lot more hawkish, spoke a lot more, literally used the word uncertainty probably 10 to 20 times, more than I've heard him say it, but basically just came out and threw cold water on the overall market and the Santa rally as a whole. So there was also some questions out there about, how does he feel about Trump and his job and things of that nature, and really what I'm looking for and why I think Wednesday is so incredibly important is the Fed going to be Team Trump, if you will? Are they willing to play ball? If the Fed comes out and they sound very defiant and uncertain and we're going to do whatever we need to on interest rates, I think you could see the market sell off pretty good at that point in time. And then, of course, it's up to earnings. We'd see what happens after there. But Trump has come out and said multiple times that I want interest rates down. Interest rates are far too high. And I said it's going to really come out in the Q&A. I think overall his speech is going to be the same speech he's been given for almost a year now. We're going to be data dependent and yada, yada, yada. Now, I will say this. After Powell came out on December 18th and threw cold water on the market, also, we got 2, not expectation prints, we got 2 reasonably cool prints on inflation data. So that gives the door open. And then some Fed speakers came out afterwards that were overall very dovish. Markets started pricing in cuts again. I don't think we're getting a cut tomorrow. I think we're going to remain where we're at. but it really is kind of the forward looking. Are they willing to play ball? Are they willing to keep all the balls in the air, so to speak? If the Fed is incredibly hawkish and incredibly, somewhat defiant sounding, and we don't care about political pressures, and it's too soon to even talk about another rate cut again or anything along those lines. I think if the Fed is really hawkish, I think the market's going to take a beating because the market doesn't like uncertainty. Like I said, if they come out and they talk about, we actually, we didn't think we were going to have too many cuts this year, but this data came in really cool. We're really happy, just that kind of stuff. Then the overall market is obviously going to do very well. But watch those key levels. I think this overall kind of Fed meeting and / earnings is just crucial for the market, whether or not we push up towards around 6,600 to 7,000 overall this year, or if this is an overall kind of flat to down year. I really do. I think we're at a critical point because, how January, so goes January, so goes the market. I'll be honest, I hadn't really looked at this yet. So right now on January, we're at a green month, but a really bad earnings season's Fed week, we start selling off towards 570, 580, and it could be a tough year for the market. I personally, like I said, I think DeepSeek or whatever is going to be one of those things that probably nobody even talks about in the next couple of weeks. Maybe a little bit, but people are still going to need Nvidia chips. Artificial intelligence is still going to be the major push. Same thing with nuclear energy. So I do believe the overall sell-off today was drastic. That doesn't mean things have necessarily found a bottom yet. So from an index standpoint, like I said, the big level to recover on SPY is going to be 600. The big level to recover on QQQ is going to be 515. It's pretty simple on QQQ. Above 515, overall, I'm feeling decent and bullish. Below 515, lots of rejections up in here, and we're going to have a problem. We're going to make new lows at that point in time. You also still have a gap fill down here to like 490 and stuff. So I think it could get ugly, like I said. And I know this is where I'll have, some retard go, oh, great, then it can go up or it can go down. And the answer is yes, that's literally always what it can do. So I'm just giving you, what I want to give you is like, here's kind of the bull case, here's the bear case, here's what to look for so you can make those great decisions for yourself, your family, and your portfolio. So we start recovering, top side, start recovering 600 on SPY, and I dig it. I really like the volume that came in here today. I like the candle that came in here today. Once again, very similar to like what happened leading up to the election. Also very similar to what happened down here with the carry trade back in August. So I feel pretty good about the overall market, mainly because it was more of a rotational aspect of things rather than just a market-wide, into the world. So let's talk about some individual stocks. Tesla, I just don't like it below 400. It's pretty simple. You have a clear and obvious daily trend line right here on the short term that you'd be looking to hold where it bounced off of right here. I've seen some people basically saying, you've got a bear flag forming here into earnings. I don't necessarily disagree with that. I still think that this overall is a very impulsive move with a normal corrective move, right? This is pretty much just the larger version of what happened here before a move higher, right? You get these large high volume moves, then you get a corrective move on lower volume. Tesla last week, even when it was just kind of slowly selling off, had some of its lowest volume on average over here, and now you've got volume picking up. The levels that I'm going to look for downside. So I want to be as clear as I can. Full disclosure, I have a multi-million-dollar position in Tesla. I have sold 430. So when we pushed up here and we rejected the gap fill today, I sold 430 calls for this week. Those are up roughly like 29%, something like that right now. And then I also sold, once we dropped down here, I sold 380 puts. So kind of this 380 number, which if we back out on a weekly basis, right, that 380 number has been a key level of support. And once again, this is what I'm talking about here. So like, even though I got the line here, you've seen we've dipped below that a couple of times, but overall it has been holding support. I like the fact overall that I feel like Tesla is just building a new base above its previous all-time highs. That is showing a lot of strength in the stock. So I've sold 380 puts for this week. I would also, Tesla's implied move is roughly 6%. So that could be basically bringing us down to the 360 range. I would definitely buy a retest of this resistance in here. So like I said, I still think this is kind of a normal corrective move, and buy that, right? And then you can kind of see how this would sort of all be filling out in the big picture of things. So you do you. I obviously have a bias here that Tesla is going up overall, even if they dip. Even if they dip, I will say thank you. I'll buy it. I said I'll take your shares. I got no problem with it. So overall, that's what I would be looking for. And if Tesla dips on earnings, all that really matters, in my opinion, is how does big money react once that market is open. For instance, if you have a move like this, where you gapped up and then you pretty much ran all day post earnings, that overall tells you the move is going higher. Vice versa, you have a gap down and you pretty much sold off all day after earnings. You got that dead cat bounce, but then what'd you do? You had to come down and you had to retest all this support right here before overall you started moving up. So I don't really care if Tesla, that's not true. I do care. I want Tesla to go up for sure. But at the end of the day, if it drops, I kind of want to see how does the market react to the drop. I do like that it's sold off and it's corrected into earnings. Tesla's going to be mainly about the guidance aspect of things. We pretty much know how they're doing on the cars. It's really going to be where are we at on potentially rolling out some robots this year. Where are we at on potentially rolling out the robotaxi this year? It's going to be big on guidance, and are we going to return to a growth story? Because the reality is they sold less cars last year than they did the year before, and this is a tech growth company. But anybody who knows and has followed me knows I don't give two craps about. I don't want to say I don't give two craps about it. Obviously they make a lot of money through cars, but at the end of the day, I don't buy Tesla because I think it's a car company. I think it's a great tech company. So that's what I'm going to be looking for. I want to see how is the energy looking. I want to see they're finishing up the semi-truck factory. Are we going to get some semis rolling out, and who are we getting partnerships with? It's just that kind of stuff. So I'm looking for the overall guidance. I don't really care what the numbers are. And I think that's going to be the story of tech earnings overall with this DeepSeek stuff coming out. So let me finish up with Tesla and then I'll get into Meta. So basically for me with Tesla, I'm going to kind of be running a strangle on it. I am not going to have any major big options positions open in any way, shape, or form. So as of now, I've sold 430 covered calls and I've sold 380 cash secured puts. So in a perfect world for me, Tesla goes up a little bit, maybe up to around like 415 or so. Overall, Tesla won't be getting out of this structure. So this is going back to that structure talk. This is what I'm talking about. You get your high, low, lower high, lower low, lower high. Now, is it going to make that lower low? So overall, we just need to see some new daily macro structure going on. And there's lots of, we're going to come down here and we're going to just make a massive double bottom. And like I said, this kind of just turns out to be sort of a massive bull flag look. I don't know. I don't care, because no matter what, I believe Tesla's going to be way higher years down the road than it is today. So I don't mind buying in here, but you do what is best for you. I won't be concerned in any way, shape, or form unless we really kind of start cracking this support in here. Even if we came down here and filled the gap at 345, that's fine. Even if we came down here and filled the gap at 320, that's fine. It would be very normal. I don't want to see, kind of some of these Trump fills. And I think, personally, that's why you've seen Tesla not do great, because everybody kind of thought, myself included, that, I was disappointed in Tesla's performance last week, because it was like the market overall kind of pumped and Tesla really did nothing. It was because Trump didn't really talk about anything that he was going to do with Elon or Tesla, or he wasn't involved in like more of the AI stuff. In fact, his mortal enemy, Sam Altman, was the one involved in it. So that's why I think you've seen Tesla's underperformance so far. So the market needs a reason to kind of get excited about Tesla up here. But overall, building a base on top of your previous all-time highs, that's a good solid thing. Let's see here. Okay, so let's talk Nvidia. So I don't like it closing below its daily 200. Obviously, this was a very distributive look. I told my Discord multiple times, I was like, 130 is really that level that I don't want to see Nvidia get under in any way, shape, or form. Then, of course, we had the big bounce back up. Then you have the bearish engulfing candle here on Friday. And then, of course, DeepSeek comes out over the weekend and everything gets smacked. So I will not be bullish on Nvidia overall until we start getting back over the 130. If you start seeing things where it gaps up a little bit and then it just kind of gets sold off, any rejection on that 200, so it could create some inside bars, kind of float up here, bear flag it a little bit, and then you get that next move to the downside. It's really going to be a lot of wait and see. Let's get more information before making anything drastic. A move back up as the EMAs catch up to then kind of get it to roll back over. Now this looks very distributive. Both myself and Bronx in the Discord, we were talked many times about how worried we were that this was a big UTAD distribution. Then it comes back up. I definitely think 100 is not off the table in any way, shape, or form on Nvidia. And coming back down here, very similar to Tesla, right? This was overall kind of that ascending triangle look that it broke out, came back, retested, pushed higher. So, coming back around here towards 95. But bottom line, below your 50-day, below all your important EMAs, below the 200-day, and the reality is QQQ pretty much recovered a lot of the move, right? It didn't make, from where we opened, it really didn't make new lows. Nvidia is not the same thing. In fact, on short-term time frames, I told the team right off the bat in the morning that if Nvidia comes up and rejects 130, that's going to be ugly, and it's a great spot to grab puts. So you can see here that opening range candle, that 5 minutes, that as soon as it broke below and came up and retested that range, it was just overall off to the races and downside. Like I said, do I think this is the unwinding of Nvidia in the market or anything like that? No, you came to the wrong channel for that kind of stupid talk. You can go to Michael Gayet or Gate or whatever, and he'll give you all the bear porn you want and then some. So, but this is clearly an impulsive, ugly move down, very high volume, widespread candle, closing towards the lows of the day. So I personally think Nvidia is in a short the pops move overall. But for the most healthy thing that you can see is that money that was in Nvidia, you start seeing it rotate over to the companies that's going to benefit. That's why you saw the Metas and the Amazons and things of that nature. You saw those do really well. So it wasn't a market-wide sell-off like fear. It was just that the people who were like, we might have a little bit too much in Nvidia. We need to find out more before we, hold a little bit massive position. Like I said, I take what CNBC says as a grain of salt, but they do have a lot of fund managers that come on there and talk, like it or not. These people manage millions, if not billions of dollars, and they all were kind of saying this is just a little bit of an overreaction, but they would say, we decided to trim our position a little bit today just based off the news till we get some more information. And then if we like what we hear and Nvidia responds, then we can, grow our position again. But the reality is as of now, until we get more information, the word on the street is Nvidia, the demand for Nvidia is about to go down drastically. And it's been on an insane run. So don't be surprised if it needs to, money just rotates elsewhere in the market. Like I said, the overall market will do fine. I told the team this is very similar to what happened in Tesla in January of this past year, when the growth story looked like it was going to be over for the year. And Tesla, if you will remember, like it was at 265 in January. Yeah, okay, yeah, right towards the end of December was poking up here towards 265, and Tesla had to come all the way down to 140 before it recovered to new all-time highs that year. So it's a long year. I do think Nvidia dips are going to be overall pretty viable. But this guy ain't trying to catch the knife. I will wait until big money has said, hey, we're really kind of done marking this thing down. But I don't think an unreasonable, if the market gets ugly enough, Fed gets ugly enough. So this was a long-term consolidation right here. You know, we kind of look at this entire range in here. I mean, potentially even all the way down to 65. I definitely think low 100s to high 90s is coming. That is my personal opinion. Feel free to disagree and say, no, Nvidia only goes up. And if you're one of those persons, well, you had a really shitty day in the market anyway. So don't turn your nose up to stuff like that. You've also got a clearly daily trend loss here. So I'm not going to sugarcoat it. If I get salty on the market and I don't like the way things look, Nvidia comes back up here to around 120 and rejects, I'm playing that move right there for sure. I think it's very reasonable to get an extended like 1.618 style move. So that'd be down to like 112, but it could pop up a little bit in between. I'll say this, and even though I've been rambling for a long time, this just wait till if you start getting daily close below this low here, so that's 116, or if you start getting daily closes above these highs. So for me, that's going to be above 130. You start getting daily closes above 130 again, I think it's you can lean back towards I'm more bullish on the stock than I am bearish on it. You start getting daily closes below this 116, the low of the day, you start getting daily closes below that, and then after that, I mean, you're coming back to 100 pretty easily, and I think that's coming anyway. I said it won't be straight down, but just like none of this was all straight up. There were still red days. There's still going to be green days in there, but it's going to be a good short the pops stock. I really believe that right now. Okay, let's jump into some ones that I think look good. So if Nvidia, because remember, you got a stock like Amazon, right, really just kind of started making new all-time highs towards the end of last year. So this thing is lagging behind big time. I think Amazon could be a winner. This is a clear sign of rotation back into money. They've got their Q4 earnings coming up. Do you think Karen quit buying Amazon Prime crap around Christmas? No. I think they're going to do pretty well. I'd watch for an overinflated run into earnings, but this is a beautiful bull flag breakout, retest, came down, kind of took care of this gap and imbalance area, and now starting to push up off of that. So obviously you need to start making some new highs above 235, but if the overall market recovers, this thing's going to 250 and it's going to it fast. Overall, I'll stay bullish on Amazon as long as we stay above 200. And really now that if for some reason we do get some really ugly days in the market, I think 213 to 214 could be a very viable area. But this is a great look. Another great look is Meta. You kind of had this consolidation. Somebody was asking me the other day, like, how do you know the difference between impulsive moves versus corrective moves? And when you start trading sideways in these kind of ABC patterns like this, and that volume just starts really getting low, and then as you start breaking out, that volume starts curling in, that's how you know. Always one of those things, easier to tell in hindsight, but that's how you have to watch those breakouts to go, is this a legitimate breakout or is this a fugazi, if you will? Because when Meta came back down here to this 585, right, the lowest volume down here, and this was also towards the end of the year, but just very low volume down here, just showing you sellers aren't trying to push this thing lower. And now, and Meta's going to be a big one for me because just like Friday of this last week, they were talking about their CapEx and how they were going to do like 60, I think it was 60 to 75 billion more in CapEx expenditure. Well, now if they don't have to do that, they've got a much cheaper version that still gets the job done. Now that money can go elsewhere. So Meta's earnings call, which is weird to me, like I said, that just Friday they reiterated a CapEx, expenditure essentially, because people like Nvidia they'd be the ones that benefit off of that. So I want to hear them address what's going on, and it could be like, hey, we didn't really know, we got blindsided, and we might have a cheaper way to get to the same deal. And if that happens, you're going to see more sell off in Nvidia. But This all goes back to like, right? You're gonna trust a Chinese company hedge fund? I don't know. It's all whack to me. So this is why I just keep going back to like, let's get more information. Like I really think don't overreact in any way, shape, or form. Let's get more information. The smartest people on the planet are willing to admit when they don't know something. And I'm not the smartest person on the planet. I'm not even close. I'm not even in the top 3 billion. But I will say I don't have enough information right now to really make an informed decision about it. These are kind of my early opinions. But this, just like Amazon, another fantastic look, coming back, retesting previous tops multiple times. Now you're breaking out right before earnings. If you're an earnings lotto player, I think 700 on Meta is probably going to happen post earnings, but we'll see. Obviously, I don't know for sure, but I wouldn't bet against it. There's zero chance I would bet a look against this and the information that we have. Okay, I want to go over to Microsoft. Microsoft, for me, I think is one that's, once again, another beneficiary of the situation. Another one we've been trading sideways for a very long time, multiple times. I mean, basically every time it's come back and tested its daily trend line, had a real nice recovery. So this is kind of what I'm talking about. Like stocks that you know that are buy the dip stocks, or even when nasty gap downs happen, you get a move like this. So if Tesla has bad earnings and they drop it 10% post earnings, if the next day the candle looks like this, then it's just a fugazi, it's a shakeout, right? It's going to go much higher after that. I think Microsoft has potential to do really well post earnings. Really hasn't gone anywhere in a long period of time, and so it could be one of those, the longer the base, the bigger the breakout. Was kind of one of the losers, not a loser last year, but I mean overall when the market's just ripping to new all-time highs over and over and over again, Microsoft literally kind of just went nowhere, right? Where did it even start? Yeah, so I mean it's January of last year, so it was up, so like 380 but I mean overall, let's just see, let's quit guessing here. Yeah, so last year it was I apologize, this one. So last year was up 12%. So that's nothing to sneeze at. That's better than I thought it was. Honestly, I thought it was going to be up like 5%. But they could be a real beneficiary here. I always like situations that it's kind of swept out anybody that was short in here. Now you kind of swept out anybody that was buying these dips, and you got a nice V-shaped recovery. I like the looks of Microsoft. Not as much as Meta, but Meta and Microsoft are definitely the two that I like the most. Another look that I just kind of like is PayPal. Let me go out here on a daily basis. So just nice little downtrend, right? You had your breakout, low volume retest, testing right here on this daily downtrend. You put a bullish engulfing on increased volume. That could be a nice looking one. Okay, this video is way longer than I thought it was going to be, so I'm just going to go ahead and cut it off there. I hope it was helpful to you. You know the deal. Please like and subscribe, all that good stuff. And when I put stuff out on Twitter and I'm like, hey, throw a bunch of likes on this and let's get it done, then please do so. And if you think that's farming for engagement, then be mad at me. All right, much love. Y'all have a good one.